Question, bro. In all seriousness, though, for example, so how does one, for example, someone who already has a business right now, right, and they're hiring somebody, or they're already paying somebody, but they're paying them cash. One, how does one go about setting up an employee legally to pay taxes? And then two, what does one do if they've already been paying an employee through either Zelle or cash for more than a year and a half or 2 years? Is
this already an S corp or?
Yeah, it's already an S corp. Yeah.
So pretty much you would hire them officially and get their W-9, which has all personal information, their address, direct deposit. So you want, if it's from Zelle or cash, whatever, it's fine, but it has to be documented. Okay. It has to be, at the end of the year, has to somehow get on their W-2.
Got you.
Now, if say you're just paying them on their table, not as an S corp, you would want to it would benefit you to pay them 1099, but then they're gonna have to pay taxes. So you want to make sure everything's legit, legal, and everything's on paper for an employee, because that's how it benefits everybody.
Okay. Yeah, for sure. And so, for example, for 2023, you could still pull back the 2022, everything for 2022?
No, I mean, you have to start from
2023 and forward. Oh, okay, got you. Okay. Understood. Let's keep it going.
All right, man. So, to the nitty-gritty, bro, to what people are coming here for, right? The steak, the juiciness. Trump's tax returns, bro. I know you just gave us a little quick rundown on how business taxes are different than personal taxes. But Trump's tax returns, bro, why are they like that? And why did he get like 50 million back or 5 million, something like that?
Yeah, it was kind of all over the place. The reason why I wanted to explain the whole situation, what personal taxes are, business taxes are, so you get to this point, so you have an idea of how it works and what the whole situation. So, so Trump's tax returns obviously complicated. It's not for the average person. He's making millions, close to billions of dollars. So
not the average person.
I want to make it as easy. Kind of break it down as easy as possible, so it can kind of relate to a lot more people to get an idea of how this works. Because all the strategies, all the loopholes are, legit. They're legal. So that's why when it gets down to it, you got to be able to play that game of make sure everything's legit, it's legal, and strategies are used.
So the question of him breaking the law and him going to jail for some crazy reason is false.
Well, the whole thing is that the idea is that everyone knows what he used is fine, but the whole idea now is was the information he provided was at false? Was he inflating expenses? So that's kind of where they're at now. So again, all the loopholes, tax strategies he used, anyone could use them. We all could use them. We all here could use them. So it's not anything out of the ordinary.
That better put a big smile on all you guys.
So that means that whatever he did,
AZ got a big smile on his face.
That means whatever Donald Trump did, the 45th president, whatever he did, you could do too. And today you're going to learn how to do that with Kevin.
And better.
Right. So, the first one, I think a lot of people already know, the depreciation. He has properties all over the place. He has hotels. So again, he has his accountants that know they've been working with him for years. So the biggest one was the depreciation. So I think for 2015, he deducted $4 million of depreciation. So right off the top, that's a lot. Second one is that he used a lot of renovation credits. So again, you can use it well. It's efficient solar panels, efficient energy for stoves, anything that saves energy. You get credit from that. It says it's an incentive of the government wanting you to do that. Next one is that he invested on historic buildings. So when you invest in historic buildings, you get some kind of credit from that. So again, I think it was.
So is it more of a donation than an investment? Like he's not getting no money in return, is he, or is he just getting the tax write-off?
He's getting a credit off of that. So he used I forgot what it was, but he's purchased it, renovated it. Now he gets the credit because of historic building. So he's able to revive it. So
okay, so if there's a historic building and I invest in it to maintain its beauty, I get a tax credit.
Yeah, exactly.
And anybody could do this.
Yeah, anybody. Yeah.
W-2 employees, anybody.
Right.
Oh my God. Okay.
Your local church, your museum.
Yeah. So I think it's real quick. Go back to what actually depreciation is, because I think people hear it all the time, but they don't actually know what it is. So what that is that you deduct the value of your asset. It could be a building, it could be a car, equipment, rental equipment. You're going to deduct the depreciation of it. So over time, assets, they depreciate. So you deduct that expense throughout the year. There's different ways to go about it. You could spread it out depending on the life of the asset, or you do it all at once. Kind of depends on, again, your situation, where you want to be at now or in a few years.
So this misconception, Kevin, I want to put this out there. This misconception that the rich don't pay no taxes and only the rich don't pay taxes is it really a misconception, and anybody could get these type of write-offs, right?
Yeah.
I just want to make this clear for the viewers out there that might be a little confused, because I feel like there's a lot of people obviously uneducated on the tax laws, uneducated on the tax codes, that might say, well, he's rich, so he gets favoritism in a sense, or he gets special privileges, but these privileges aren't special to anybody in particular.
Right.
It's just if you know the tax code. Am I correct?
Yeah, that's correct. And then I guess the biggest business or expertise that get the biggest tax benefits are rental properties. So people who do real estate. There's so many credits, deductions you could do for rental properties. A lot of the government pretty incentivizes you to rent properties to,
Because of affordable housing,
Yeah,
right? So if you provide affordable housing for somebody, you get rewarded by the government, because that's something the government does not do. They can't provide it, so they expect the person that provides it to receive a sort of type of reward.
Right. Yeah. So wealthy people, they have properties everywhere. That's why, again, when you work with your accountant, you're able to maneuver all your rental properties, and they most likely always going to be a loss or big deduction expenses.
So you're telling me that mostly Trump saves taxes due to tax write-offs and tax credits?
Yes.
And that's it? There's nothing else?
Basically, the basic easy form, yes, that's what it is.
Oh my God. So it's just two things?
Yeah.
It's not even nothing crazy?
No, nothing too crazy. No, I'll give a few more points of what's happened. But example for the next one is net operating loss, which is carryover, which means that from 1995, he was able to carry his loss over 900 million. So if you carried over for 20 years. So he carried over 900 million of his loss and spread it out throughout 20 years.
And this is legal?
Yeah. If you have a business, anyone can do that. 2015, did the same thing.
You said he was carrying that same loss?
He carried over a portion of it each year.
Yeah, so
9
million divided by 20, if it's 20 years,
Right.
that's like a deduction that you get on your taxes.
Right.
Wow.
So that was, again, that's something else that he used. Same thing, 2015, 73 million that he spread out throughout the year.
A quick question
Loss.
before you keep going, bro.
Yeah.
How much of an actual loss, how much can you claim as a loss before you start getting audits from the IRS? I've heard a lot of people who just every year is loss after loss after loss after loss.
So you want you have to have a profit 3 out of 5 years.
Okay.
So once you start after 5 years, 6 years, it's been a loss every year. That's when things got a little shaky, a little red flag. So
Got you.
at least 2 or 3 out of 5 years, you want to have some kind of profit.
So that means that if you're reporting a loss because you think you're saving on taxes, you're actually becoming a red flag for the IRS to audit you and come after you.
Right. Yeah. So again, it is important to kind of sit down your situation. If you're looking to buy a house or buy any kind of property building, you don't want to have a loss for 10 years because no one's going to give you a loan for that. So you do have to sit down in your situation and see, okay, right now I don't need to buy a house or anything, so I'm okay with having losses. But a couple of years, I think, want to buy some property, you want to start showing some gain, some profit. And so it all depends. Again, it's all your situation. It's all about knowing the game and be able to benefit from it.
Okay. I like it, man. So what other points do you have for us, Kevin? What other points do you want to educate us on about Trump's tax returns or anything else that you may have?
Yeah, I think it's going back to personal expenses in your business. So we kind of explained before, you can manipulate using your personal expenses for your business. Like I said, cell phone. Everyone uses cell phone for business. You could deduct. It's a percentage of whatever you use. So most likely it's 50-50. So
I know the one I use in particular a lot is meals, going out to eat, right? So if I take my girlfriend Giselle out to a nice dinner, I could write it off as a business dinner. Is that?
Yeah, as long as there's some kind of conducting any kind of business,
So if I just say, "Do you want to become an investor?" Even if she tells me no, it's a business meeting, right?
Which most likely we'll say no, but yeah.
Okay, makes a lot of sense.
So, again, it's all plain game. Why not? Let's all go out to eat and have a few drinks, eat some,
and then be like, "Do you want to join Line Wealth Club?" And you're like, "Yeah," and then we're like, "We don't care."
Too bad. Same thing with travel. We could go travel somewhere, conduct some business. We could talk to people.
And the business does not have to go through for it to be a write off.
What do you mean?
For example,
Oh, right, exactly.
like there doesn't need to be an actual like.
Yeah.
Like if I conduct business with him, but no business was ever made because he didn't agree, it's still a write-off.
Yeah, exactly. Yeah, you go talk to his prospect. It might be a client. He ends up not wanting to take it. It's still deductible. You still went and traveled. Again, you had dinner, you had drinks, and it's all deducted.
A lot of knowledge for you guys. If you guys have any questions, once again, write them down in the comments section so that Kevin can answer these personal questions to you in particular. Okay, Kevin. So, any more points?
Yeah. So, again, back to the business, personal expenses. So, again, you want to be able to not manipulate in a negative way, but be able to show that I'm using my personal expenses for my business. So, again, utilities, internet, home office. Home office deduction is pretty huge for a lot of people, especially now a lot of people work from home. So, you're able to deduct your home office expenses. There's two ways to do that. You could either do it standard way, it's just your square footage of your house or your office. Then multiply that by 5. That gives you your deduction. It caps out at $1,500. Or you do the actual expenses, where you take a percentage. So you take the square footage of your office compared to your actual home, whatever that percentage is, you deduct that. So a percentage of your mortgage, percentage of your utilities, like I said, your gas, all that, whatever you use for your business, you're able to deduct.
Okay. But once again, this has to come from a good CPA, right? Someone that knows his stuff. Because if someone's just plugging stuff in, you're not going to get the same results.
Yeah, you want to be able to set up. The best way is in the year to get it all set up. Even if you're midway, you just want to set it up properly so by the end of the year, it's all there and
ready to go.
Yeah. Good to go.
Okay, sounds good. What else, Kevin? What else do you got for us?
I think it's important for expenses to really get. Like I said, we talk all the time now. You always call me. Can I deduct this or not? That's really important just to get the basic concept of it. It has to be ordinary or necessary for him.
Yeah, guys.
Expense.
Good point that Kevin brought up. I technically don't buy anything without calling Kevin. For example, when I bought this equipment, you know how to get the green light from, dude? You know how to ask, like my parent, like, hey, Dad, can I buy this? It was more like, hey, Kevin, what do you think of this? He's like, yeah, you can buy that.
But like Kevin said, once you kind of get the game, you kind of like don't even have to ask. You're like, I know he's going to say yes. I can do it. You know what I mean?
Yeah, over time it gets easier. You got to understand the concept.
So, like, for example, my boy AZ, right, behind the scenes, if he wants to buy some lighting, some anything having to do with his business, he's able to deduct that in his taxes.
100%.
Yeah.
Okay.
So, and again, if he buys a new laptop, it's for his business, but obviously he's going to use it.
And then when he goes out with his girlfriend, conducting business, right?
Right. Just make sure you bring something up related to...
Yeah. In a good...
Hey, can I take a picture of you?
so on the receipts are important. With 2023, who likes receipts? You got to keep them. So on that receipt, if you go out, going back to the meals, you have to write who you're with, what you guys discuss, and then a date. Make sure it's a date and a time, and then obviously the price.
Now, I have a quick question, right? Trump's taxes, the main thing here. And he broke no law. But how is it, right? You talked about credits, you talk about lowering his tax expense, but that tax return, how is it that he got such a big tax return that a lot of people don't even imagine?
Again, it goes all back to, like I said, his taxes are very complex. He has over 400 LLCs, so you can imagine how that might go. So
400 LLCs?
Yeah. Because it's from properties, it's from his helicopter, a whole bunch of stuff. So, and a majority of those, reason why it's kind of being red flag is a lot of his businesses are a loss. So the whole thing is, how can he be such a great businessman, but how all his business be a loss? So that's kind of the issue.
Because of the loopholes, correct?
Yeah, exactly, yeah. So, and again, going to more of accounting topic, it's not necessarily what's on your P&L, which is profit and loss, your income expenses. It's more on your balance sheet. Your balance sheet is the income. It's from your business information from time. It could be from first of the year to now. P&L is more of a certain specific date. So you can't really go off your P&L. You have to go off your balance sheet, which over time gives you a better understanding of your business. So,
okay, so if I started in 2017, for example, and I have a loss that was the first 2 years, and it carries on to the next 3 years, even though I'm still profitable, I'm still losing money, technically.
Technically, yes. But again, you would go back, look at your balance sheet because if
the balance sheet is negative, is what I'm saying.
Yeah,
I get money back because it's still negative.
No, actually, no. Your P&L, because you go off your P&L.
Okay.
I'm saying more balance sheet is more off of business.
So he got his big fat tax return because of his P&L.
P&L, yes.
Okay, makes more sense.
Yeah,
Makes a lot more sense.
Again, it's all about the carry over losses that he had carried over to throughout the years.
Okay, so it was like 750, 0, and then I think he got that return. Why is it that the return hit like that year?
More expenses. I think that I don't know that specific year he had some donations, like over 20 million, I think, donations.
So the profit he made, he just donated it.
No, he just had that expense.
Oh, because the donation becomes a business expense.
Yeah, it's good to write that off. Yeah.
Okay, so but I guess my question is like, why was the tax return so big?
Oh, yeah, because he had such a big loss. So
From all the
So
500
but why is it that
LLCs,
they give him back money
obviously.
that much?
because it could be from credits. Sometimes credits are there's refundable credits or just credits that reduces your taxes. Some credits you get a refund from that. Some credits you don't. So whatever credits he had.
So that year, I'm guessing he had a lot of credits that gave him a lot of refunds. So he ended up being positive in pocketing money.
Exactly, and then throughout the year, it could be like property. He could pay property taxes or whatever taxes he already paid.
That's what I was looking for, Kevin.
So they fall into different categories in the spendings. One that's for return and then one that doesn't give any return, right? Is that what you're saying?
Yeah, you can look at it that way.
Okay,
Yeah, that's more of a credit. So there's credits,
credits,
and
right.
deductions. I guess
Gotcha.
a good topic to kind of go over.
Okay, so there you guys go. President Donald Trump did not break any law. The tax codes that he used, you could use in your personal taxes, whether you're an employee, business owner, or whatever. Kevin obviously brought you guys the knowledge.
You just explained. Don't listen to
I
your
love it,
parents.
man. I love it.
Watching the news.
Kevin, when you start doing these steps to try to get these deductions, is it difficult for the average person? Like, let's say I work a 9-to-5 job, I make a pretty good salary. Is it hard for me to start an LLC and get these tax loopholes, deductions, or write-offs that you're talking about? How hard is it for me? Do I just need to talk to a CPA? How do I do it?
If you're knowledgeable, you can do it yourself. But obviously, you want to work with someone who's in that field industry to kind of really gives you the details. To answer your question, no, it's not hard at all. It's just being able to know what loopholes to use, what strategy. Loopholes is not really a bad thing. It's just a term. So just knowing the strategies, loopholes.
Do you recommend LegalZoom to start your LLC?
Yeah, they might be a little pricey, but yeah, they'll give you
cheaper options.
Yeah, oh yeah, definitely.
Or what you could do is go over to Certified Taxes on Instagram, send a DM to Kevin, and he'll do it for you and save you a ton of money that you would have spent on LegalZoom.
Stop doing your own
I'm talking from experience because my first LLC was through LegalZoom, which Kevin recommended. I wasn't a client at the time, so I don't blame him. But when I became a client, he's told me his price. And I promise you, dude, I saved 70%.
Oh, you should do your
70 to 80%, dude. I saved 70 to 80%. Now I'm talking about taxes. I'm talking about starting an LLC.
Oh, starting your
LLC. Starting an LLC. So make sure if you guys have any questions at Certified Taxes on Instagram, my boy Kevin, he'll take care of you. He can do virtual appointments, everything.
You got it all.
He has it all. Based
wanna
out
say
of
anything,
Whittier,
bro?
California. But, dude, you have the internet. You guys can FaceTime. Right, if you're in Colorado, he'll take care of you.
It's very accessible. So you want to end it with anything, bro? You want to say anything else before we top it off?
Yeah, so pretty much what I do is, like I said, I do taxes, but I'm here to build a relationship to help you guys do accounting, bookkeeping, obviously taxes, create a business. I also do mentoring. I helped a few people open up their own business, tax business. So yeah, we kind of set up meetings. I kind of ask all the questions they want. They email me, phone call. So it doesn't have to be. It could be any kind of business. You want to open your tax business? I'm willing to help, or any kind of business. I'm willing to help. Obviously, my expertise in taxes, but any questions, I'm here to help.
Oh yeah,
I like that.
And think about it, man.
We don't gatekeep.
No gatekeeping. But not only that, but imagine having a great relationship with your CPA, where you could have a beer,
right?
have a beer, cheer it, and sip it.
Hey, CPAs are the best people, bro. My CPA, she brings me every time she comes with her mom, right? She's from the Philippines. Homemade food all the time. So you have to have a good relationship with your CPA.
It makes
Dude,
sense fun, yeah.
if he's handling my finances, I better have a good relationship.
Yeah, that's
with
true.
him.
That's
Like,
true.
Right?
this guy has passwords people shouldn't know, bro. Like,
Social security numbers.
yeah, bro, he can ruin your life.
That's the whole thing. Like, I work with a lot of people, but I just wouldn't work with anybody. If you're difficult, it's just not going to work,
Yeah.
Dude, you gotta have a good relationship. Not only that, but you have to have a lot of trust.
Right.
I still remember when you asked for the password, I was kind of like, "What? Like, what do you mean in that password?
Like that too.
What do you mean, bro? Like, I haven't seen you in years. So what do you mean?
Are you even real anymore?
Are you real, dude? Like,
I met you one time.
dude, what the hell? I met you one time. You're asking for my social.
Yeah, I know. When I first did, I called my dad. I was like, "Hey, Dad, the lady's asking for my social and for my password for my bank." And I was like, "He's like, yeah, go for it. It's good. Don't worry about it." I was like, all right.
Yeah, that's the thing too. Like, why it goes back to relationship, because I have a lot of your personal information, so I want to make sure you're comfortable with me. And I'm comfortable with you. makes it easier.
Oh yeah, and I feel like with difficult people, you always run into difficult situations with them, which sucks.
Yeah, I want to be able to call you. Have questions without like going.
What do you want?
Yeah, like something weird. So I did want to touch on one more kind of tax strategy.
Okay.
That again, a lot of these they're not red flags, but they are. People don't use them because they're not aware of them. You guys golf?
Yeah.
I
mean, I go to the Rage. That's really about it.
You guys know Masters tournament in Augusta, Georgia?
Okay, no, I haven't heard of that. No.
Well, it's a tournament in Augusta, Georgia. So there's a tax strategy called the Augusta rule. So what that is, you could rent out your property. Anyone could rent out their property. If you rent out your property less than 14 days, whatever income you receive, that's not taxable. So you're
telling me I could rent out a property to myself because I'm paying the LLC. I started LLC. Listen to this, guys. I started LLC, right? This LLC now owns my property. I'm an individual. I stay in my property. Mm-hmm. I pay my LLC. Let's say I have $100,000. For 14 days. Divide that by 14. You pay your LLC that every day. And you said it becomes it's
non-taxable.
Non-taxable. So I could transfer $100,000 into my LLC for 14 days and not get taxed.
Well, I don't know about 100,000, but you want to do a good amount,
okay,
reasonable amount. So like
nothing that's gonna say like, what the hell are you doing 100,000 for?
Yeah.
Okay.
You have to be able to find a venue within your area, like kind of compare prices. That's how you kind of base off. So yeah, your S corp can pay your personal self. So you're paying your S corp. You're going to pay yourself whatever rental agreement you have to your personal income, and that whatever rental amount is, you're not a tax.
Dude, I just gave people how to launder. I just told people how to money launder.
That's what it looks like, but that's just the game.
It's the game. It's strategies, guys. It's like when you guys are playing a sport, you guys are gonna learn how to win. You guys are gonna learn how to ways to win. Well, taxes and finances aren't any different. It's a sport. You have to learn how to win. You can't. These rich people that pay nothing in taxes are not doing anything different. They're not doing it stuff illegal. It's all legal. This is and if you think the system is rigged against the little man, it's not. You just heard it from Kevin. Any person could do this. It's just about the knowledge. Obviously, we don't teach financial literacy in classes, and that's why we started what we started, Latin Wealth Club. And I do want to make this known. You do not have to be Latin to be on our podcast. I feel like a lot of people got the misconception. We call it Latin Wealth Club because we're Latino entrepreneurs. We are embracing our culture and what we are, while giving the knowledge that our community needs. Guests on here don't need to be Latino because there's a lot of stories that might touch a lot of people that are in different situations that most Latinos might not be in, but some Latinos are, right? And if we have a guest that has successfully accomplished or achieved or gone away from that, we're gonna have them on. So I just want to make that clear. But with that being said, guys, this is the end of episode 4 of Trump's Taxes Explained. We had Kevin give you dropping knowledge, dropping nuggets. Use those nuggets, right? Talk to your CPA. If you don't have a good CPA, hit up Certified Taxes on Instagram. With that being said, this is your boy MP.
Your boy JC.
All money in, no money out. Stay dedicated, stay motivated.
Until the next podcast. And thank you so much, Kevin,
for
all your knowledge. And we hope to have you back on.
Oh, definitely, yeah.
Kevin, this was great, bro. Thank you.
Can't wait to come back.